Are you wondering if Utah's housing market is going to crash? We definitely are in a shifting market currently. We're shifting away from all that craziness where every single house is getting multiple offers, going way above list price. So we're definitely shifting away from that, as we still currently are seeing some houses getting multiple offers. We're seeing some houses sitting on the market, which nowadays seems like an eternity. And we are seeing some homes dropping price because they're not selling. Those are indicators that we are in a shifting market. Where we're going to land, well, that's $1 million answer. And in this video, I will provide information of why potentially we could see a 10 to 30% correction in home values. And typically that would be a crash. However, this isn't a typical market, since we've seen record-breaking appreciations since COVID started, and will only impact those people that bought during the COVID pandemic. Now, next week, I will drop a video of why we could see a market crash, and that's where values would drop 30 to 50%. And that, in fact, would impact people that bought prior to the COVID pandemic. And that, in fact, would be a crash because it would impact such a large amount of homeowners. So make sure you hit that subscribe button. That way you're notified when that video drops next week. My name is Dinko. I'm a licensed real estate agent and a licensed mortgage broker in the state of Utah. If you need to get a hold of me, my contact information will be down below. Call or text me anytime. Interest rates are the leading reason why we are in a shifting market. When the Fed announced in December that they were going to start increasing the Fed rate to get inflation under control, mortgage rates already took that into account, and mortgage rates started going up. So we were around 3%, and the talk was we were going to settle somewhere around 5%. Well, we surpassed that a while ago, and mortgage rates change daily, so we're anywhere between 6 to 7% now on a given day. So that's quite an increase from where it was projected, and it was supposed to be a gradual increase, and we surpassed that months ago. So I want to show an article here that was released by Northwest Bank, and they wanted to kind of show what a 1% interest rate does to your monthly payment. And as we can see here, so principal and interest, because that's the only thing that's affected by the interest rate. Insurance and taxes are also part of your payment, but interest rates have nothing to do with that. So a $1,500 monthly principal and interest payment with a 3% interest rate with 20% down is able to buy $445,000 worth of house. Now, if it goes up to 4% over here, that same $1,500 principal and interest payment is only able to buy $392,000 worth of house. Now that's a $50,000 drop in purchasing power that an average buyer has by the interest rate going up 1%. And in Utah, well, there's not much for $400,000. So a $742,000 principal and interest payment is $2,500 at 3%. At 4%, it's $655,000. So there's almost a $100,000 drop in purchasing power by the interest rate going up from 3 to 4%. And remember, we were supposed to settle into 5, and right now we're at 6 to 7. So it's almost doubled what it was just about 6 months ago. So that's quite an increase and a lot of purchasing power that an average buyer lost. Now, inflation is also at record highs at 8.6% from May of 2021 to May of 2022. And that is the biggest increase in the last 40 years. Now, that's also going to make a buyer lose purchasing power because their groceries, their gas, and other goods are going to cost them more money. So you're losing purchasing power because of inflation, you're losing purchasing power because of the interest rate, and hopefully the Fed can get inflation under control so we can settle and pull back the interest rates, because the reason interest rates have gone up more than they were anticipated to is because banks are seeing that as a riskier investment now and saying, well, hey, if inflation is not going to be under control, this money's not going to be worth anything in the future, so we got to increase these interest rates. And also want to show here what's going on with the entire housing market. So the artificially low interest rates caused home prices to explode during the pandemic. And Core Logic here says that, oh, this is Moody's actually. So Moody's says 96% of the housing market is overvalued, whereas Core Logic, everything here in red, is considered overvalued. They say that 67.9% is considered overvalued. Oh, it's actually 65 here. So 65, 96%. Majority of America now is considered to have an overvalued housing market. That's insane. It used to be, well, in Utah we did have an overvalued market before the pandemic as well, but now it's kind of exploded. And the way they do that is average income, average housing price, can the two support each other? So now, majority of America, the answer is no. And we were supposed to have a soft landing. That's what the Fed was trying to do. Jerome Powell of the Fed was saying that, hey, we're going to go for a soft landing. And a soft landing would be great, meaning the economy wouldn't really be affected much. Well, now they're saying that a soft landing is going to be very challenging and a recession is possible. And you probably hear this a little bit in the news. So what that has done is it's made companies, especially the tech sector, do hiring freezes. I mean, Tesla did a 10% layoff worldwide and a hiring freeze worldwide. Facebook, Netflix, all these companies are doing hiring freezes and layoffs. So what happens when people start getting laid off? They can't find income to replace the current income. They can't make their monthly payment. And yes, real estate is local. The Utah economy was booming before the pandemic, was one of the hardest entry-level home buyer markets in the nation. But if the war in Ukraine can affect us here in America, other markets not being able to sustain the value loss and whatever's going to happen to their economy will also have an impact of what's going to happen here. So definitely keep an eye out on that. And it also got me to think, well, since there's microeconomics, macroeconomics, well, the world is connected more than ever before. And what about Canada? So I wanted to take a look at what was going on in Canada, and I found out that Canada is actually already in their correction. So they're the Jargons, I don't know if I pronounced that right. I think that's like their Goldman Sachs, or maybe that's like their Fed. I don't know. But they're saying there could be a 15% shave off of home values by the end of 2023. Well, Canada's market was doing great. Multiple offers, going up in price, going up in value, whatever. And now they're already in their correction, and now they're anticipating it's going to be about 15%. Maybe it's less, maybe it's more, but it's definitely something to keep an eye out on, and it's not in the media. So could we see it? Maybe, maybe not, but definitely keep an eye out on it. New construction is another one that you have to keep your eye out on. And there's a lot going on in the new construction world. So I want to show y'all an article here by Forbes. 1/3 of houses for sale are new construction, and that is an all-time high. If we take a look here at this chart, 21% of houses for sale in 2019 were new construction, 25% in 2020, and 34% in 2021. Now, Utah is one of the leading states in new construction. So why is this a bad thing, and what can, potentially happen? Well, if inventory is already going up, and if we are already seeing a shift happening, what happens when existing homes start hitting the market? And they will, because now sellers are no longer scared of COVID, but at the same time, they won't be scared of being homeless. Yes, they could sell their house for record price, but could they buy one? Well, as we're shifting away from all that craziness, we're going to see more people that are now looking to upsize, downsize, retire, relocate, and there's going to be an influx of existing homes hitting the market. So that's definitely something to pay attention to, and that will definitely shift the market further from that craziness. Now, where that shift is going to land, that's definitely something we're going to find out. As we can see in this article by Fortune, there was a 7% increase in new construction starts from January to February. And if you compare the starts that happened in February of 2022 to February 2021, there was a 22% increase in the starts of new construction. So the builders got overly optimistic. They wanted to take advantage of another great year. Everything was saying that 2022 was going to be good. Nobody was anticipating interest rates to skyrocket the way that they did, and inflation as well, which now has decreased the buyer pool. So from March to the end of May, we actually saw a 43% increase in inventory nationwide. And that's during the purchasing season. So what happens when fall and winter come, and a lot of these new construction houses that are starting right now, that's exactly when they're going to finish. And that will further influx the inventory. Now, we see here in this article released by CNN, there's one more sign that the housing market is cooling off. So in May, there was a drop of 14% in new construction starts, and that was actually down 3.5% from the previous year. So what happened was January, February, March, and April, all of those months saw a decrease in new construction sales simultaneously. Now, in April, it was so bad it was actually double digits, and that's why in May the builders panicked even a little bit more. Now, builders are definitely panicking because they are offering incentives to both realtors and buyers. And if they didn't think that they had an influx of inventory that was going to be hitting the markets, because we know they were selling houses, not all builders, but some, when the house was completed, they'd call up the buyer and say, hey, your house is going to be $50,000 or $100,000 more today than it was when you went under contract. And that buyer would either come up with that money, go up in price, or they would sell it to the next person in line. So if these builders are giving incentives, that's definitely something to keep in mind. Now, I want to show these charts, and these charts we're kind of going to go over everything, and they're going to kind of show us of what's going on. So what happened was in April, we saw that the sales were actually 629,000 units right here. So this is showing May. So in April, it was 629, and that is 200,000 houses less than in April of 2021. Now, an article was just recently released that in May, there was actually a gain of 10% for builders. They actually sold more houses in May than in April by 10%. So that's a positive increase for new construction. However, if we compare that data from May of 2022 to May of 2021, we see that it is still severely lower. So it was 696,000 houses in May of 2022, and in May of 2021, that was 769,000. Another reason why we're seeing these completions and sales ramping up is because the builders are now trying to finish these builds quicker. They're no longer wanting the builds to take a while longer and ask for other buyers if they're willing to pay more. That's one reason. The other reason is there is no more supply chain issue. So if there's no supply chain issue, if wood prices are starting to bottom out, these builders can get these houses done quicker. So a couple of months ago and last year, sometimes it was a cabinet, a stove, or whatever that was delaying a build for 2 to 3 months. I mean, the entire house is pretty much finished, but a builder has to wait just because of a stove, of a cabinet, something very, very small. And we're seeing those homes now probably hitting the market quicker, which sales should start picking up if we're looking at the numbers. But at the same time, all of these permits and all of the starts. So let's look at this chart. We see new construction completion has stayed relatively the same and a little bit higher. Now look at these starts. Starts are way higher and permits are way higher. And all of these starts here are delayed because of the supply chain issues that we had. So all of these houses plus the record starts that we had at the beginning of the year, all of those houses are going to hit the market at the worst time. It's going to be the fall, the winter. Rates are already slowing things down, and that's going to further influx the inventory of homes on the market. So that's why we can definitely see some shifts coming. And I want to show one more thing here, and that is wood. So if we take a look at the wood chart, so we see that wood was always about $400, $500 per 1,000 board feet. Then during the pandemic in 2021, it skyrocketed up above 1,600, and it was going down. They said it wasn't supposed to go down until August of 2022. It actually bottomed out in August of 2021. And then we probably had some price gouging, and there was some political stuff and tariffs on wood, and wood prices started going up, and all of a sudden the market got crazy again, and all the bidding wars came back again at the beginning of 2022. As in the fall, we actually saw a cool down where things were staying on the market longer, and then January kind of wiped all that out. And then right now at the end of May, wood prices did go from 1,200 where they were earlier in 2022 down to 600, and right now in June it's flirting between 550 and 600. So all of that is indicating that new construction is probably going to get cheaper, and the new construction homes are going to cost the builder less money. So if the builder can't get a certain amount of money, they're going to lower their price and lower it further. Plus, they have to get this house sold, or else they're out all the other hundreds of thousands of dollars. So they're going to decrease their value, and that can decrease the value of the people that overpaid for their new construction with all the bidding wars. And if new construction is starting to lower their prices, and we see new houses that are existing coming back to the market because now sellers are more comfortable in upsizing, downsizing, relocating, retiring, or whatever, that's going to further change the inventory and further change the shift. Now that's why we can potentially see prices correct 10 to 30%. Subscribe to my video, because next week I'll drop a video of why we could see a crash and what could lead to 30 to 50% decreases, and that one would impact a whole lot more people. So definitely stay tuned. If you have any questions, call me, text me anytime. Like I said, my number will be down below. Leave comments, I'll get to those as well. And thank you for watching.